Welcome to the Locke in Your Success Trade and Market Update for August 24th, 2015. Before we get going, we would like to remind you that the presentation is for educational purposes only. We're not broker-dealers or financial advisors, and we're not making any specific trade recommendations. Also, please be aware that the risk in trading options is substantial, as you are seeing here this morning, and make sure that you are aware of all your risks prior to placing any trades. Also, please note that we are using hypothetical computer simulated trades in the presentation that are believed to be as accurately represented as possible. However, live results may vary. If you're watching this on YouTube or some other venue, come on over to the website and join our mailing list, get your free report, 7 Secrets to Becoming a Successful Trader, and sign up for this free weekly webinar. And while you're there, check out our programs. We got the super simple spread trades, the M3, the Bearish Butterfly, the Rock, the M21, and APM squared. And stay tuned for our programs that are currently under development. And also, we do a live trade Monday mornings at 10 o'clock, which is actually going to be canceled this morning. Seth is very busy managing the trade desk, and we're probably going to end up having to trade out of some of those positions as well. So we won't be having that this morning. We'll probably have that sometime later in the week. But in general, we do that weekly, Monday mornings live at 10 a.m. So consider joining Options Drive for that. And if you have not yet put in your results for the Hawaii Challenge, please do so for August. And we'll see how everybody's doing. All right, so let's move on and take a look at what's going on in the marketplace. Most of you know last week I was thinking that the market was going up, and I was actually a little bit short-term bullish. Although we were looking for the market to top out relatively soon and come down, I didn't think it would be this soon. The news just overwhelmed the technical traders, and just obviously we see what happened here towards the end of the last week. Just some trivia for those who are interested. Friday was the 9th biggest point move in Dow history to the downside. We had about the 20th largest percent move in Dow. We had the 8th biggest point move in the SPX, and the 3rd biggest percent move in the VIX, and the 6th biggest point move in the VIX. So very, very rough day. Not the worst we've seen, but very, very bad. This morning looks like it's going to be significantly worse. We have 47, looks like a 40-plus point gap down on the Russell, which I do not believe has ever happened before. Very, very large gap. Also an indication they're probably going to buy this thing when it opens up, but of course you can't count on that. You have to stay within your risk parameters and so forth, but it looks like that's what we're looking at. It's one of the largest gap downs in history, so pretty interesting morning here. As far as where we're going, you have to go out to our longer-term charts. Dow support, or at least the closest thing we can call support here, would say that would be the bottom of this candle, which is around the 15.8 level. With us down 700 points, we're probably not going to be far from that when we open. So that is kind of making sense. Also a point where we're likely to actually see a little bit of buying. Because what I'm looking at here, when we get a market crash, is I'm coming into the weekly charts and I'm saying, you know, what's an area where people are likely to buy this thing, where technical traders are going to be excited to buy it. Because the market's been so up so much recently, it's hard to find those points. But I would say that right in this area is one of them, right in the around 15.5-ish on the Dow is one of them. So we're coming into one of those areas. Possibly we get a reversal out of there. The SPX, this should have been a support point. Obviously it was not. We have our next support point down here on our weeklies down around 1882, which looks like about where we're going to be opening. So again, another reason to buy, although we did have a candle all the way down into around the 1825 level, which is concerning that we may go up into there. After that, we have no support in the SPX. We have nothing. The market has just been so far up and so aggressive that there's very, very little support here. And that's kind of scary when you think about it. But, you know, so if I'm going to buy this thing, if the market's going to not completely fall apart, then I'm kind of looking at this area here between 1870 and 1820. On our Russell, the good old Russell here, I was expecting a touchdown here to this lower area of around 1130 of course, we're going well past that. Looks like we got a 50-point gap down here, so that's going to put us down closer to, I would say 1080ish. We do have some support, but really our primary support area here is 1030 again, which is kind of scary. So you have to watch that. We do have a big potential for the down move, which is why you can't just sit there and hope your position is going to come back. You really need to manage it out. That's not saying I'd panic out of this in the morning, because I think prices are going to be completely crazy, but it is saying you do need to take this seriously and not hope. If you get an opportunity to get out of your positions here, bounce at the end of the day type of thing, or protect them, or something like that, then that would be fine. Otherwise, we're probably going to be trading out of these at some sort of a significant loss, probably beyond our maximum loss numbers. So tough markets right now, and it's going to be a wild ride today. So hopefully we do capitulate today and we bounce up. If you're looking at our VIX numbers, let's come back to the NDX, right? The NDX is the NDX is posting now 208 points. On the NDX, that puts us down under 4,000, down a little bit actually under this support level, which again is kind of concerning. Next support level is around 3,800. All right, so where are we going? That's what I think. Who knows? If I knew where we were going, we'd all be rich and we could post aside. But like I said, right now we're just kind of in a free fall. I think a buying area here is somewhere in this between 4,000 and 4,100, which we're going there today. We're going to a lot of areas where people should be at least interested in buying this temporarily. Let's hope that happens and we can pull our positions at somewhat of a reasonable level, because I'm sure in general we're not going to be at much of a reasonable level on the open. I just got a question here. Would I still wait to end of day to start adjusting midday? Okay, so this is a question that comes up a lot. Generally, I'm going to wait till end of day to adjust anything. Right now, the biggest point in drop in history, open to close, we see in the Russell 64 points. Will we exceed that today? I do not know. But I can tell you I will usually go with the odds, and we're already down 50 on the open. Another 14 points isn't going to make a whole lot of difference in the volatility levels. I would wait it out. End of the day. Now I'm in this position on a trade desk, which they may not allow us to wait it out, but I would do that. As a trader, that's an individual choice. But again, I tend to wait it out. This here could certainly be bought. As a matter of fact, I think a lot of people would be very interested in buying at the levels that we're going to hit. So I don't see any news out there that's going to cause this harsh of a sell-off. But I'm not the one making the decisions there. But that said, yeah, I would tend to wait till the end of the day if you can, because you got to look at what your profit and loss is on open. You figure you've already lost the money. Decide how much more money you're willing to risk from that point, and from there, just let it go. I certainly wouldn't do anything in the first half hour today, and I would consider not doing anything till the end of the day. But like I said, you know what your positions are, and you need to be responsible with them. So that's a personal choice. Do we buy puts at the open? No. The only way I'd buy puts here is if we get a very large bounce. So if we come in here and the market really bounces and you think you're all set and you don't have a problem, it would be normal here for the NASDAQ, for example, looking at this chart, to bounce to 4,300, which is a 100-point gain, and then just tank, continue on down. The markets are too toppy for me to do that. If I can get in my position and I can get it to the point where my loss number is at a reasonable number, and I can buy put protection and try and ride out the month without taking too much upside risk, because they could buy this and take off to the upside too. You just don't know. And I've seen this happen even in 2008, because the moves were so large, where you get a big down push and you cover your downside, but you leave your upside. You let the T-plus airline drop a lot on the upside, and then you get the reversal, and you just get completely toasted to the upside. So it's just the way that it is. It's just the way that it is. Also, when you buy your put protection, you have to watch that if you do that, because what's going to happen is your put protection is going to be way, way overpriced. It's going to have a ton of time value in it. And if you blow out the backside of your tent and come down the backside of your tent and become a very positive vega back there, which is what he tends to do, you'll probably also be negative theta. If the market stops and they drop the volatility out, the value of that's just going to crush, and you're going to take a big loss there. So you have volatility risk outside the tent to the backside, and you have reversal risk that you have to be very, very aware of. So, just keeping those things in mind. All right. Yeah, as far as entering an October position, I do not have a problem entering an October position. We have here's where you got hurt. You got hurt in the transition from a low volatility upturning market to a crashing market. That shift is going to max loss your traders out most of the time, unless you're put protected or you're heavily negative delta. It'll do that. So that being the case, now that we're here, trading should be relatively normal. I mean, you just watch your pricing getting in. You want to be very, very aware of your pricing when you get into the position, and make sure you're not really overpaying for something. But assuming you can get in at what you deem as a normal price, and we'd figure that out by going back and historically and taking a look at what Butterfly should cost. Basically, if you're buying a 20-point under the money Butterfly, under these volatility conditions, you're looking at like $6. If they're charging you $10 for it, you're going to get screwed, right? So $6 or less probably, something like this on 20 points under the money, 50-point wide Butterfly. But I don't have a problem getting into this because everything's priced for this volatility level, and it's actually very tradable now that it's up. And let's see. I just have some questions I'm looking at here. So anyway, I don't have an issue going into that. Into October, why not hedge with TF instead of options? Well, this is a good reason not to hedge with TF right here, right? TF has unlimited risk to the downside. If I buy a put option, if I buy a call option, this volatility increase actually hedges off my delta loss to the downside when the market comes down, and my total loss is much less. If I do it with TF, I technically have an unlimited loss. It's like owning a stock. In other words, that loss never drops off, and I don't get a volatility kick. So for both of those reasons, I'm much better off in an option like that. Now, in the event that the market went up or didn't move, you'd actually be better off with TF, but to me, they're too risky to hold on to because of the unlimited loss potential in them. How does the drop in futures today play into strategy? I don't even understand that question. Yeah, $6 for a Butterfly is a great deal. Yeah, I mean, the futures drop right now. I mean, I don't know what to say about it other than, yeah, they're really selling off hard here, and we don't know where the market's going to go, so we'll just have to just keep that open. All right, so that is that. So let's see how we were doing with our positions here. I have an August position last month that I went over that I screwed up. Actually, I have the wrong option view open too. So let me close some stuff out here. And of course, this morning going to be tough on any October position, but I do end of day trading in most of my live trades, and with the exception of the ones I do on a trade desk. The trade desk I can't do end of day, and I can't let the futures come down this far without doing anything about it. But certainly I can do that on my live trades that are mine, and I'm going to go ahead and do that. I'm going to wait it out. Let's see, we had an August M3. Let me drag that up there. That I'm going to show you a couple of examples of this here. Let's see here. I'm going to go back to 8/11. So if I come back here, we had this October M3 position on, which I did not properly trade in back trading, right? This wasn't a live position, this was a paper position. So I missed a positive delta problem that we had earlier in the week. So let's see, if I go back to Monday 810. So let's go to 810 here. Actually, I have to go back all the way to Friday 87. So this is what I missed on that presentation here with that. I was in this position here. I had too much actual positive delta. I actually had to buy, let's see, 87, 87, 815. I had to cut my delta back by rolling the position back. So I came in here and I bought 3 12 10 12 11 90 verticals. I bought one 12 40 12 20 vertical when it's at this position here. And we look like that. And then on Monday, this position got 3 1190 1210 verticals and 4 1200 1210 verticals. So if you look at the T log here, you can see on the 10th this was the move we did here, and on the 14th, on the 10th, yeah, on the 10th we did 1 1220 1240, 3 butterflies here. Oh, hold on, let me see here. I have to redo this on my own. I apologize. I have emails I'm watching while we're doing this. So anyway, we move back into this position here. You guys can watch the T log. I don't want to spend too much time on this because we have other important stuff going on. But we moved into this position here, and then nothing happened. Then on the 14th, we were actually able to close this. So if we come to the 14th, people are telling me to control yoga. I'm stressed out. Yeah, I'm stressed out because I have, and this is another thing too with you guys. I have, just so that you know, if you're emailing me, I have Skype going, I have email, and I have 100 messages, and I'm also dealing with the trade desk and my own trades and some other students. So I just have a lot. I'm watching like 42 different things right now, and which is why I kind of sound a little bit stressed. But it's not the market conditions. It's just all the messages coming at me at once. It keeps me wound up a little bit here. So we want to do that for people. So anyway, this trade here ended up still coming in okay and making out all right. So that is the M3 position. I apologize for not going over this more carefully, but I don't even remember exactly what I did here. So here's the T log. Take a look at that. You can guys go in and redo that position if you'd like, and go ahead and see how that made out. But essentially, that was the end of the August trades. If we did actually take this trade, there's two things that happened in this trade. One thing was that was the error I made last week. That's correcting the error I made last week. Another thing that might have happened for you guys that trade intraday is on the 12th, you may have rolled this back. In other words, if we come back to the 12th here, we had an intraday market that swung down quite a bit. You see the big candle here. And some people adjusted back intraday, which again, I don't typically recommend doing. In other words, even a day like today, I'm going to tend to leave stuff till the end of the day. And we end up with what we end up with. If you did not and you actually rolled this back, you'd end up in a position that like this. You would have rolled back to 1170, and then that would be early in the morning. So you would have taken this early in the morning on the, let's see, what date is it here? This is the 12th. So early in the morning on the 12th, you would have rolled this back to 1170, and then with the bounce, you would have had to make an upside adjustment. So we rolled this back. We started closing or widening out our verticals to come into a position that looks like this. And from there on 813, you'd have to adjust up again. Right, so this late in the game, what I start doing is I start closing out these upper verticals. So you'll notice I had 10 upper verticals. Now I'm down to 9, and I just move my shorts around a little bit. That would give us a position that looks like this. And then on the 14th, we have another up adjustment here. right? So we just adjusted more shorts up, and we actually closed out another one of these, so now we only have 8 upper spreads. Puts us in a position that looks like that. Then on the 17th, we actually have another up adjustment, right? Because this is what happens with these intraday stuff, right? So we actually have another up adjustment, and we end up in this position here. Realistically, you could close off these lowers. They are virtually worthless if you wanted to. I don't necessarily know that I would, but it's something that you could do. And then, of course, we have, let's see, the 17th, and then the 19th. You would just exit this out. I would exit it because we are at, let me just go to 1530. We're actually at half our profit target numbers here. We're 2 days to expiration. You should consider exiting something like that, especially a month as we've been chopped around back and forth. However, if you didn't do that and you wanted to continue forward, then what I would do is end up trading this and closing this during the day at some point on August. Expiration day is the one day I will monitor stuff intraday, and as soon as it started really pulling us down to the downside, we'd want to exit out of this intraday. And if you didn't exit out of intraday, you still should have been able to come out profitable, because it would have been less profitable, but it would have been okay. So either way, the August M3 should have turned out pretty much all right. So that is all the August trades. Ray says, thank you for thank you for sharing the calm demeanor during this historical event. Yeah, I mean, there's nothing you can do about it. The money is, the market's down. The money is already gone. All you can do is manage your way out of it the best that you can. And this is why we control our position sizes. If you've ever been to one of my programs, I talk about controlling your position size and how large you should trade and things like that. And this is one of those examples why we do get these huge moves. There's very, very seldom, but you don't want them to wipe you out. You want to be able to survive and trade another day, and this is one of the ways to do it. All right, so October positions. Let's quickly do that, and then the market's going to be open. Oh, I'm sorry, September positions. All right. Oh, another note too. Weird settlement price on the Russell too. If you expired options, you had a huge gap down, and you could have got hurt there. So you got to watch that as well. When you have the markets like this, let me just go to the dailies here for a sec. And you have a support break in the SPX, like we did. Here, right? This was Thursday here, right? So we had a support break in the SPX on Thursday. You have to really watch the next day. Those are the days sometimes you get some crazy RLS settlement values, and we got a crazy RLS settlement value on Friday. So I haven't heard from anybody that got really nailed on that, but certainly one you could have got nailed on. A reason that when you go into option settlement, if you're going to expire your trades, you want to cut your risk down as much as you can, your total risk, because that could have been hurtful for some people as well. All right, so let's move to August. So September. September Bearish Butterfly had an adjustment on Friday, so I will just go to Thursday for September Bearish Butterfly. And that puts us here. We have slightly down below our short strikes, but we don't adjust a Bearish Butterfly there. Friday, we ended up rolling this back because we actually hit our roll point. Roll this back to at the money, which is essentially the guidelines. And this is what we looked at like as of Friday. Even our 50-point drop today, from a Bearish Butterfly standpoint, is not a disaster, right? This is why this is a fantastic trade in this type of an environment, by the way. Butterflies are really cheap. They can withstand a ton of price movement. And realistically, for the most part, you should be able to trade these down to $0 on the Russell without really taking, you possibly win without taking too much of a problem. The challenge comes in the whipsaw, which when the market bounces. So in other words, if I have to adjust this to the upside, I'm going to do M3 type of adjustments rather than bearish butterfly type of adjustments. And to the downside, I'll continue my bearish butterfly type of adjustments. So that would be that position there. So what do we have for questions here? Yeah, the settlement gap was the biggest since 2008 on the Russell, which is very, very interesting. All right, we're off. We'll see where the market goes. We'll quickly go over these other trades and we'll let you guys go. This is what our September M3 looked like as of close on Friday. This trade during the week got a rollback on Thursday. So if we look at this on Wednesday, we had our 22 contract, we had our 11 contracts. We were in this position here. Everything is looking perfectly fine. We're actually not that far from a profit target number. On Thursday, we hit our maximum delta. I rolled back to 1150. I reduced my contract size to 10. And on Friday, this is what the position looked like. I don't think there was another adjustment on Friday. So this is going to be hurt today, obviously, with this down move. Here's what we look like. But certainly no danger of max lossing out. We'll just have to adjust as things come along. And let's see here. We have our September rock trade, which is hurting as of Friday. I entered this on Wednesday, as is normal. Oh, NDX. Let's see what's going on in the NDX. This looks, NDX is 381 points down. That is insane. That is insane. Thank you for the heads up on that. Dow's down 700 points off the open. I think this is one of the biggest gaps that we've had. So really, really insane downside gap here. If you take a look at this SPX chart, right down where we're saying, right, 885, 884, we should capitulate here. We might come down and see these areas here, but we should have some buying interest at some point there. But let's look at the 5-year chart here for a sec. Come on. It's not giving me a 5-year chart. Let me put log on. I can't get a weekly chart up right now, so I don't know what's going on with Thinkorswim. My charts are gone. All right, so I don't know if you guys are having trouble. I'll have to restart Thinkorswim. That is, wow, historic event you see here, guys. That's cool. All right, not cool from a financial standpoint, but very interesting to watch. Anyway, here is our rock trade as of Wednesday. This was my entry, 1180. Right, you have to laugh at that now that we're down at 1080, right, or pushing towards 1080. But 1180 here, this one's going to get hurt. Thursday, I think this had to have a rollback. Right, we rolled back to 1150. Friday, I don't think there was anything that needed to be done here. No, the 14-point down move, we were perfectly fine. And of course, this is going to get hammered today. We'll see how that ends up next week. And like I said, I'll adjust out of this or close out of it at the end of the day, depending on how bad it is towards the end of the day. And let's see here. I also have to have September V Condor. This closed out at a loss. So if we take a look at the September V Condor, we close this out Friday. I have basically a rule that if I get past my short strikes, we close it out. Right, I was past my short strikes Friday, so we just closed this out. It was actually about a $2,500 loss towards the end of the day. So that was closed out there. Good thing about a V Condor is, a situation like this, even if I had held this open, today we'd be down in here. We might actually even be better off with the market collapse here. But as of right now, that's what we have. And that is it for those October entries. I had an October Bearish Butterfly, which we entered. I'll just do this quickly, then you guys can get off and get back to your stuff here. So we had an October entry here with a Bearish Butterfly, which this will be no problem whatsoever. We had an M3, which probably won't even be much of a problem either here. this is likely to be perfectly fine. Like I said, the Bearish Butterfly M3, very, very nice trades for this environment. The V Condor is near a volatility level where it's a do not trade according to the rules. We'll see how this goes. But again, this move probably isn't going to bother this too much either. So the October positions look good. And yeah, so those are all the positions. That's what we have going on. So everybody, be mindful of your loss numbers today. If you're under your maximum loss, don't do anything stupid. Just exit the market. Like I said, I would avoid trading certainly the first half hour, and then from there, see what we do. Best of luck for everybody, and like I said, make sure you live to trade another day. Now that the market volatility is high, this is actually a very good environment for us. So they can be made up in the months to come. So I love trading the Bearish Butterfly. 2008 was one of my best years I've ever had running that trade, and the M3 did very well in 2008 also. So good times coming, but we have to get over this hump first. So everybody, would I open a Bearish Butterfly today? I don't know if I'd open one today. I would have opened one certainly on Friday. It was a decent one. I wouldn't be afraid of opening one today. I would prefer to wait for a bounce if we get one later in the day. But yeah, I don't have a problem opening a Bearish Butterfly. I don't have a problem opening an M3. What I would caution you with, though, is if you do open a Bearish Butterfly, I would avoid scaling in on the bounce. In other words, just let the market go, and when you think it's topped out, then roll up, then scale in, because you're going to need some added range. Because when we get the bounce, it's likely to be hundreds of points. So good luck, everybody. And like I said, just trade your plan, and there's nothing to be stressed out here about. It's just part of doing business, and we just move forward. So option view data has crashed. Okay. Well, thank you for that, Vincent. Hopefully you have toss data. Hopefully toss data stays alive too, because that could be an issue also. So have the best day you can, everybody, and we will we'll update you next week. If you have any questions, just contact me, and I'll get back to you as soon as I can. Like I said, I have a lot of stuff going on. So have a great week, everyone.